Welcome to Pearson Bryson. My name's Conrad, and welcome to Stock Alphabet, where we go through the letter A, B, C, D, all the way to the letter Z, and we build a portfolio of 26 different companies that we're going to invest in, which is why we call it Stock Alphabet. Let's get right into it. Our previous episode that you can watch, I put a picture of the previous episode. We chose letter A for Apple. Apple company is what we chose and invested in. And a matter of fact, it was over the weekend, so this market was closed. So I'm actually going to get into my computer right now, and I'm going to share my screen with you, and we're going to buy Apple. This is the last episode. You can follow it right there. And you can watch my deep dive on why we're investing in Apple and the goals. And here we are, buy Apple. And so we do essentially, we go through every letter of the alphabet and pick a company, and we invest and we research, we review the ecosystem through the Securities and Exchange Commission, and we look at 10Ks. I left a 10K report for Apple in the previous video, and for this video, we're gonna, after I buy this Apple, we're gonna actually purchase Beyond Meat Inc. You might have heard of that company. See it, we'll go to search, put the letter B, and there we go. Pardon me if there's a delay. I'm trying to share my screen with you. And we'll buy, and that's it. So we buy in the beginning of the episode. So essentially, that's what we're doing here, is just making sure to, I'm using my Charles Schwab account. You don't have to use a Charles Schwab. You can use Fidelity, you can use Robinhood, you can use even Cash App Invest, whatever you feel comfortable with. You can buy fractional shares. We're buying whole shares, no matter how high it is or how low the price might be. We're gonna buy wholes, at least one at minimum, per each stock we choose, and we're gonna keep investing in from January 1st all the way to December 31st. So you can see how we file our taxes with investments, how we actually invest, how our investments grow. You go through our losses, you'll learn how to invest and what our method of thinking is. You do not have to invest in these companies. We're just sharing what we're investing in. A lot of hedge funds and financiers and banking institutions do not show how they invest. We're showing you how we invest and how we capitalize and strategies, etc. So it'll be a lot of fun. So again, Pearson Bryce, we call it the Stock Alphabet. We're gonna go through every letter and build a 26 company portfolio. Today's topic is Beyond Meat Inc. You might have heard Beyond Meat Inc. If you're vegan, if you're plant-based, if you believe in plant-based or basically eating where you don't really consume any type of meat, you might have heard of them. If not, this is a company worth looking at. It's been through some scrutiny. It was actually recently all the way down to like 90 cents actually as of today's date, January 6th. It was actually at pretty much 90 cents, went up to about $1. It's been fluctuating. It's traded on the NASDAQ. So what happens, unfortunately, is that per NASDAQ, it's a major exchange. If it falls under $1 and it stays under $1, it could possibly, Beyond Meat Inc. can actually be delisted. If the company's delisted, that's not good. What that means is it'll end up going to the OTC market, which is the over-the-counter market, and it's deemed a penny stock. So technically speaking, since it's still on a NASDAQ, it's not considered a penny stock, even though I myself and other financiers, bankers, people in the investment sector already consider typically a stock that's under $5 typically a penny stock. But per Securities and Exchange Commission's rules, it's still not deemed a penny stock because it's still listed on the NASDAQ, which is fine. But I personally consider it a penny stock, even though technically speaking, it's not a penny stock. And I don't want it to become a penny stock. I invest because I want to make money. I want the company to grow. I want my clients to be happy. I want to be happy. You want to be happy. You want to make money here, right? But I'm choosing this company, even though I'm speculating. I have highly scrutinized it. I create this whiteboard. I'm gonna leave the picture of my scrutiny and my research that you can research yourself. Again, I'm human. If you want to add any other ideas, leave them in the comment, totally fine. But this is part of my investment framework on how I invest. And Beyond Meat, for the most part, I'll walk you through my thought process. Great company, as I mentioned. It was down at 90 cents, which per IPO, on IPO, a date back in 2019, pre-COVID, pre-pandemic, it was trading expectedly at $25 on IPO date when the stock was first made public. It was a private company originally and became public, and it closed that date for about $65 approximately, which was phenomenal. This was what you call a decacorn, if you haven't heard that terminology. A unicorn is a company worth typically $1 billion. A decacorn is even more rare. It's typically a company that where it's worth 10 billion. Deca, like DEC, decimal, dec, 10, you know? So it's basically like a company valued at 10 billion or more, which this is one of the rare companies in the world that was considered a decacorn on IPO date. Phenomenal company, worth over $10 billion. Startup, a lot of investor capital. They did phenomenal the first year, but they've been through quite a bit of scrutiny. And someone might ask, why invest in a company that's red? Here at Pearson Bryson, when I invest, at least, what I believe, and you might believe differently than me, is I believe in researching, reviewing the 10Ks. I left the 10K for Beyond in the description below. You can do your own research through the Securities and Exchange Commission, the 10K, you read the 10Q, you can read the 8Ks, etc. And it gives you a better understanding of where the company's at, the debts, the liabilities, the responsibilities, the contracts at hand. And this gives me a better framework. So even though we're going through stock alphabet, behind the scenes, I researched, spent quite a bit of time on multiple companies. So I chose Beyond, which, as you saw earlier when I showed you my screen, I put the letter B in and multiple companies come up, and I'll pick maybe a few companies and I'll research it, and I chose Beyond. So I'm showing you what I do behind the scenes, but I'm just seriously editing this and keeping it short, where I went through a few other companies and I chose Beyond. The reason I chose Beyond is this and this mostly. First, I'm gonna tell you a quick story. I was in France pre-COVID, like as COVID was occurring, I was in France. The reason that matters is because Beyond actually penetrated the European market. Very well known in France. They were well known in Canadian market as well, and also North American market, like United States. So the United States and Canada, the Canadian market, which is North America, essentially, Mexico as well, Mexico, you'd be surprised. North America was already penetrating that continent, but they also penetrate the European continent. That was a huge green flag for me back then when I was researching this company. And it brought me back to my methodology when I was in France. I remember that they're everywhere. They're in a popular grocery chain called Casino. So Casino was the first major group that is a grocery store conglomerate, kind of like in the North American market, like Kroger, Rouse, Food for Less, Albertson. Big time grocery chain that actually invested and sold the Beyond Meat stock ticker BYND, Australia NASDAQ, through the French market and European market, which is phenomenal. It's called the Casino Group. I left their website in the description below. Maybe you've heard of them before, maybe you haven't. But if you're French or travel to Europe, they're very well known. It's on almost every block. Very, very popular chain. So that was big news. First, they were the first to introduce the penetration of this product into the French market. That's the first reason. And that's one of the reasons why I am investing in Beyond, and you should research this too, is because first and foremost, they have hundreds of $1 billion contracts with, for example, McDonald's, with Yum, which is the conglomerate over KFC, Taco Bell. They've had a lot of other contracts with Starbucks, Carl's Jr. They're known all around the world with different fast food chains. Plant-based has become much more popular, and also a lot of being vegan, vegetarian, again, people eating just more plant-based, they utilize that. So a lot of companies actually use like Walmart, Costco, Cisco, the list goes on and on. So even though this company is going through a red time and they deeply declined, I look at this as a discount time. Yes, it's speculation. Yes, I could be wrong. I don't think I'm wrong. I'm really wrong. Doesn't mean I can't be wrong. I'm really wrong. And I chose this company because I look at it as a deal. And this will only go two ways for me. Either A, which I hope it does, it increases in value to such a degree where it pays me very well when I sell and have a realized gain. Beautiful. That's my first strategy. That's what I want to happen. I want it to increase in such a way. I want it to, from 90 cents to $1, like I bought today, I want to maybe see it at like $5, then $10, etc. That's what I want to see. This is a long-term investment for me. I'm willing to weather the storm, and that's my first analyzation of this. The second analyzation is if this goes completely the opposite direction. Say there's another black swan event, maybe COVID occurs again, or COVID 2.0 or 3.0, or something really bad happens in the world, just something unexpected, black swan event, right? Or it's just something out of our control, or it just does bad, just mismanagement. What I think is this, is even though the company will, if it declines, right, I believe, in my personal opinion, this is a speculation. I'm not giving you any type of financial advice. I am not your financial advisor. I'm just sharing why I'm investing into this. I'm going to keep investing into it. Stock ticker BYND, Beyond Meat Inc. is because I believe this company, since it's in Walmart, since it's in McDonald's, since it's in Yum Yum Company, which is KFC, which is Taco Bell, Costco has it. It's penetrated the global market, the casino group. This has become a staple of life. So what I think about this is that since it's become a staple of life, even if the company goes down, what I believe is highly speculative. So you don't have to invest, but this is my true belief, and I've been right, and I've been right in the past. And I thought I'd be right about this too. If it goes bad, I feel this company will, yes, probably follow Chapter 7 and maybe liquidate everything, or file Chapter 11 and reorganize all the debt, or they'll completely go out of business or be bought by someone else. Because in my personal opinion, again, this is speculation, this is not factual, too many hands are in the pot, meaning that this is a deal. If they do so bad where they have to sell for cheap and be bought out by companies, I do believe McDonald's or other companies, for example, will buy into this to own the product, own the trademark, own the IP, the intellectual property. And what they'll do essentially is they'll take full control of it and rebrand it. And then that would either be Beyond Meat or it'll be something completely different. But they'll own the construct of whatever this product beyond plant-based meat is. This is what they'll own, and they'll still have these contracts. And I believe that they'll take over in that way. So either A, they'll start managing the company properly and bring it back from the red and bring it to the green, which I'm really hoping for. That's speculative, I know, but I'm really hoping for that. But even more speculative is if they do fail, I feel I still win, because what happens is if they sell and they file a bankruptcy, or they close the company, for example, or they liquidate everything, all the stocks, or they actually reorganize everything and rebrand themselves, then what happens is I feel they'll probably sell to another company that will buy out and see the bigger picture and invest and own the product, own the IP, the intellectual property and everything, and have all the contracts and control. Because now they're not only beyond the company, you have all these contracts where they're supplying plant-based meals. I went off with my buddy yesterday. We were at a plant-based restaurant. The food was delicious. And it just reminded me of why I wanted to do this video and why I wanted to invest in Beyond. And it built my conviction. Conviction is what allows me to buy even when a company's in the red, or if I buy it in the green, it goes to the red and I keep on buying. Most people and clients I've had, even the most savvy, we become scared when we see red. It's just how it is. It affects our mood. When you see a stock go red and go down, you want to sell, you get nervous, you become anxious. I've, at this point, have broken that button. If it goes red, I have a poker face for the most part. If it goes green, I have a poker face. I'm not happy or sad. Either way it goes at this point. If I believe in the company, I'll go through the scrutiny. Because what you forget is this is the emotional business. So when people are getting scared and selling off their Beyond, I'm buying it up. I'm buying it up. In my Charles Schwab account, I'm using for example, I only bought one share because this is purposes for example. But my own other accounts, I have a business account and also have an individual account as well that I buy stocks with, and I'm investing heavily into Beyond as well. This is a discount for me. Will I be right? I believe so. I could be wrong though. It's definitely a possibility, not being arrogant. But this is what investing is. This is what makes it so fun, because when you win, it's like you actually won a game. Everyone thought it was gonna go down, but I bought and I won. And this has happened to me before, and this happened for you as well. So again, that's one of the main reasons why I believe in the company. It's due to all the multiple contracts with other fast food restaurants, their track record that they were one of the first in history to be a decacorn, which is impressive, being valued over 10 billion. Yes, they've been through a lot of scrutiny. They're actually in the red now. They're at 90 cents, which is definitely a fall from grace. But I'm buying it up by the loads, because I believe this company will rebuild itself. And if it doesn't rebuild itself, then it'll be an excellent strategy that I utilize, where they'll either be bought out, which is another speculative idea, I understand that, and they'll be able to be bought by, say, like a McDonald's or another conglomerate, some company that will see the bigger picture. I do believe in that. And worst case scenario, if everything just goes down and it's just done, right? It just becomes my tax strategy. Remember, I'm building a portfolio in front of you guys. I'm one of the first people to do this with my stock alphabet strategy that I developed myself here at Pearson Bryson, and I'm teaching you it as well, where I type in a letter, I pick a company, I research a few, and pick the one that I have most conviction with, and I hold to that one. So essentially, I'm going to be investing more into Beyond. But the cool thing about this, if nothing happens with it, if no one buys the company, if it just becomes nothing, it's at best a tax strategy. I either sell it at a loss and it becomes a realized loss, and then at that point, even if it goes to OTC market, say I bought it for $1. Say I bought for $5, and it gets delisted and goes to the OTC market, the penny market, right? And say it sells for $1. Then I basically sell it at $1, and I basically use that $4 per share as a tax deduction. There's a IRS or I.R.C code, or I'll call it IRS tax code 1211 and 1212, where it allows you to carry forward and carry back if you're a business, if you're a C corporation specifically. If you're a C corporation and you have losses, capital gains or capital losses after you sell, and it must be sold for it to be realized. If you haven't sold it, it's not a realized loss or gain. So what happens is, if it's a C corporation, can actually carry back for 3 years. And the way it works from the furthest year back. So say, for example, we're in year 2026, so we're filing for the year 2025. You file, say you have losses of whatever the amount, it could be $100, could be $100,000, could be $1 million, could be hundreds of millions of dollars. Wherever you lost as a stock investor, you'll actually start utilizing this advantage to, if you paid taxes last year, of course, and years before, up to 3 years, you can actually bring down and utilize the losses to recoup and bring down the tax you paid and the amount you paid for the last 3 years. So the way it works, you start from the furthest year, to 2022. Say you have $100,000 of losses, right? In 2022, let's say you have $50,000 of losses. Great, it knocks that out first. And say you had $10,000 of losses in 2023. They'll knock that off. That's $60,000. You have $40,000 left. And let's say you have $20,000 you have you have in losses, or that taxes you want to pay off, or you want to bring your taxes down. And now say it honors that, it brings your tax down to zero. So say you have taxes that are still owed. Say you have to, if you want to bring down your taxes further, you can bring it down to zero by utilizing and spreading the tax losses of your current year. So if you have losses in 2025, you use those losses to basically have a tax benefit and bring down your tax bill for 2022, 2023, and 2024. And now you have $20,000 left, and you can use of losses, and you can use that to carry forward. You have the option to carry forward or carry back. You carry forward 5 years, or you carry back 3 years as a corporation. If you're an S corporation, if you're elected to be an S corp, or you're a partnership or an LLC, these are pass-through entities. These are treated as an individual. So if you're an individual trader, as I mentioned, I have an individual stock account, and I also have a business stock account. And say you earn income as an individual, say you have a W-2 wage, you could be a physician, a doctor, an attorney, an engineer, you could work for a fast food restaurant. Doesn't matter if you are an employee who's a W-2 typical wage earner, you can actually utilize your tax losses against your ordinary income. A lot of people don't know this, which is pretty cool. Now, if you're married and you file separately though, you're limited to $1,500 each. But if you're by yourself individual, you actually get to deduct or utilize $3,000 of say you have $10,000 of capital losses. Say you lost $10,000 of losses in stocks. You can actually utilize that, and you can pay off, and you can deduct $3,000 from your ordinary income to bring your tax rate down. You're capped at $3,000 though. I know it's not super amazing, but it's something. But more importantly though, what's really cool is you can utilize it as indefinitely and unlimitedly, as many times as you like, carry forward as an individual, or as an S corp, or as an LLC, or a partnership. It's treated as an individual. And what it does is it allows you to carry over the tax bill, and whatever losses you got, say in 2025, for example, you could use it to deduct or benefits towards 2026 gains. So let's say if you earn, say, $20,000 in stock investments. Let's say you actually are up $20,000. You sold, you earned a profit, you have to pay taxes on that. But you have losses of $20,000 from 2025. You can apply that to your capital gains, and it brings your tax rate down to zero. Pretty cool. Same way it goes if you have, let's say you earned $30,000 of capital gains and you won, right? 30,000, but you have $100,000 of capital losses from 2024, for example. You could carry that forward, and then you can actually wipe out your whole capital gains, and now you have $70,000 left. You can use 3,000 of that towards your ordinary income. Now you have $67,000 left of capital losses that you keep indefinitely forever, pretty much, applying to the future tax years of your ordinary income and your future capital gains. Let that set in. I'm not your tax person. I'm far from perfect. I'm always willing to learn more, but that's a valuable tax secret. IRS tax code 1211 and 1212 is what you want to learn. I left them in the description below. And very important to understand these tax codes for yourself. If you're doing your own taxes, if you have a CPA, a tax strategist, run this by them too. Show them this video. Again, I am not your tax person. I am not a tax person. I'm sharing a strategy with you, and you want to do your own due diligence, and highly recommend you do that. But that's pretty much the beauty of it. I have my 3 strategies. Either option 1, company goes up as it's done pretty much. I trust myself. And I believe I am right about this. It will increase, but even if it doesn't increase, I always have another strategy. So you don't just, when you buy a stock, you have to think in different facets. Don't just think if it goes up. What if it goes down? You need a tax strategy then. If it goes up, you need a tax strategy. If it goes up, what are you going to do with the money? Are you going to reinvest in it? Are you going to capitalize on it? Are you going to sell it? Are you going to let it stay in your account as unrealized gains? Like, what do you want to do with this? People oftentimes think of a stock and that's it. With Beyond Meat, I do believe in the company. I believe in the infrastructure. They're going through a hard, tough, rough time. But in any option they go through, of the 3 options I listed, I'm going to benefit. I'll win in every way. I'm going to win if it goes up. That's then it'll increase. I bought it at a low price. I'm going to win there. Second, I'm also going to win if they go through some type of Chapter 7 or Chapter 11 and they go through bankruptcy. I'm going to win that way, because then I'll strategize in such a way where now if they're restructuring, they'll either issue new stocks where maybe I'll recap that way and it'll be bought out by another company, like say a McDonald's or a KFC or a Yum Yum company or a mega company. I'll win that way. Or third, if they completely just are desecrated and destroyed, then I'll still win, because tax-wise, I'm building a portfolio of 26 companies anyway. There will be losses. And this is what you have to get through your head. Anytime you invest, expect losses. Get used to losses. Get used to no's. Get used to disappointment, because it numbs you. Then you start running on neutral. You're good all the time. Doesn't matter if it goes up, if it goes down. You just buy. You buy, you sell. There's no real emotion. It's more like you're buying it in such a way where you remove the emotion, and it's more based on facts and what you believe in, your convictions. This board is the board of my convictions and why I want to invest in this company. And it doesn't matter if it gets delisted, doesn't matter if it gets sold to another company, doesn't matter if it completely just gets desecrated and destroyed and it becomes nothing, where they liquidate all the sale, it just becomes zero. Then at that point, the IRS allows you to liquidate and brings you down and brings whatever I spent. So if I spent, say, $100,000 on stocks, then and they liquidate the stocks, then they essentially brought the value down to zero. I could use that as a tax strategy towards my other investments to offset. And this is where it gets really powerful, the whole offsetting. So very important to understand this. I'm going to leave this in the back of the, end of the video, pardon me. And you can study IRS tax code 1211, IRS tax code 1212. You can study what the Chapter 7 liquidation means, what Chapter 11 reorganization means. You can study the fact that they penetrate the European and Canadian markets. Like I said, when I was in France, I noticed them. And I'm sure if you go to any fast food in your neighborhood or wherever you are, ask them about Beyond. Most companies and most stores sell it, or most fast food restaurants do have it. It's very popular. And this is highly speculative, as I mentioned. This is based on my facts I observed myself. It's still speculative. So I do believe in this, and I've believed in it before. It was a very strong company, but unfortunately, COVID did affect this. Again, this was in 2019 when it went through the IPO in May of 2019. COVID happened a few months later in 2020. Pretty crazy. So that's pretty much what's going on. So like I said, the COVID pandemic was issued a pandemic March 2020. And that's when it was declared. It started off as an epidemic and became a pandemic. It's classified March 2020, COVID. So this company is still here. I do believe in them. And again, I think that's really about it. There's not much more I want to share beyond that. It's just I do believe in the company, and that's my conviction. So like, subscribe, share, follow the video through. And again, the previous video was the Apple video. You can see my thinking on that. I left a picture right there, and you can follow that video right there. And that's gonna show, like, that'll be the next one. I'll go into why I chose Apple and my scrutiny and the whiteboard presentation. And you can follow this video through, go through the descriptions, and just review and research. Anyways, like